Hello and welcome to the Money Show, your one-stop destination for your personal finance queries. I'm Kavita Thapliyal and today we have lined up a power pack show for you today where we'll be focusing on 31st March deadlines and we'll be giving you tips and tricks to save your taxes, and we'll be also trooping on the counter to get your mutual fund portfolio queries answered. So just in case you want to send across your question, you can do that on our WhatsApp number, which is 865-797-4571. You can also send across your questions via our email ID, which is themoneyshow@etnow.tv. So a great content, everything related to your financial portfolio coming up ahead. But then let's get you the top headlines of the hour first. Nifty back above 22K a day after Fed sticks to a rate cut plan. Mid caps and small caps also snapped the losing streak. IRDAI gives approval to Bima Sugam, which will officially be named Rashtriya Bima Sugam Nigam. It will serve as an online platform with one-stop solution for insurance. Akasa Air CEO says it's the best time to be in aviation industry, sees robust growth in next 10 years. SBI chairman finally files compliance affidavit in Supreme Court saying that all details of electoral bonds, including the alphanumeric numbers, have been disclosed to the Election Commission. Supreme Court puts on hold PIB's fact-check unit appropriately sets up by Centre to check fake news. Apex Court says constitutional issues are involved. Congress leaders accuse PM Modi of his party of systematic efforts to cripple Congress financially. Rahul Gandhi says democracy is being frozen in the country. MS Dhoni steps down as CSK captain. Ruturaj Gaikwad takes his place. Alright, so we present to you a very special segment which is Save Your Tax, and today we'll be focusing on every aspect of saving taxes, why the right kind of insurance. Now, be it life insurance, health insurance or general insurance. We all know insurance is to be taken as a risk cover, as a protection for yourself and for your family. But then when it comes to savings tax, should this be your criteria of buying insurance? There are a lot of insurance policies that give you insurance as well as investment options. Should you be looking at those options just to save taxes or to have them align with your financial goals? Let's answer all of these questions. Today I have with me Harshvardhan Roongta, CFP, Roongta Securities. Harsh, welcome to the Money Show, and thank you for joining in. So 31st March deadline is almost around the corner, and a time where people buy a lot of or they look at a lot of tax saving instruments, and whichever they get first, which is usually an insurance policy in most of the cases, because this is the time when also we see a lot of mis-selling cases rising as far as insurance policies are concerned. Right way to look at insurance should be as a instrument that gives you risk protection. All right. But when it comes to savings tax, you have a lot of options in insurance. How can one go about it?
So, well, Kavita, you've rightly pointed out that we are at the fag end of the financial year. And at this point in time, I mean, all the individuals, or rather most of them, will be running around to save taxes because they have deadlines to finish with their investments to save tax. And the most convenient person available would be a life insurance or agent around you. And without application,
Okay. I think there is some technical issue with Harsh's connection, but then, as he was just rightly pointing out that it becomes very important for you to have the right kind of insurance, and this is a time when we'll see a lot of agents coming up at your doorstep, and, even if you go to a bank, you will see a lot of them selling you life insurance policies or maybe a ULIP plan, plans where the main point of selling you a policy would be, getting the tax benefits since you are already late. Talking about having tax benefits, we know a lot of options, including a life insurance option and ULIP option, are there in ATC. But one has to understand that only if you are a taxpayer who's paying tax as per the old tax regime is allowed to have these tax benefit. The people who have transferred themselves into a new tax regime would not be getting any tax benefit on their insurance is concerned. You know, the insurance portfolio is concerned. I think we have Harsh back on the line. Harsh, are you there? Okay. Yeah, you can continue your
Yes, yes.
explanation.
Yeah, so Kavita, I was mentioning about this that at this point in time, when you're in a hurry to save tax, most likely you will buy into something which is conveniently available rather than what is appropriately required for you. So the first sense, that I would like to, point out to all your viewers would be that do not invest in any product. It's not about insurance or any other investment product. I'm just saying, do not invest in any product only to save tax. You have to look at the merit of that product. So what you do is ask yourself a question any time that you're going to be looking at investing. Would you invest in this product if there were no tax benefits available? So if the answer is no, then do not invest it. Do not invest in it only to save tax. That is exactly what I'm trying to tell you. So what you have to do is you have to look at your requirements, your goals, and your timelines, etc., and then find a product which matches with that goal and also provides a tax benefit. So that is okay and that is good. But if you're investing only to save tax and it helps you no other way in your financial life, then you should definitely not look at it. And at this point in time, as you rightly mentioned, towards the end of the financial year, you will have many cases of mis-selling. Something that people come and tell you and lure you for high returns probably and ask you to invest into something. Well, that's not how you should go about investing for your tax saving purposes.
Exactly. So, how should one actually look at insurance as a product and also as a product that helps you save tax? Okay. Insurance product giving you a facility to save tax should be like a byproduct of this investment that you might want to look into, or should that be the first priority to look at insurance, Harsh?
So see, Kavita, first and foremost, insurance and investment should not be clubbed together. So the purpose of insurance is to provide for a security in case of something happens. So it's a pure risk cover. So if you buy a life insurance policy, what is your primary objective? Saying that as an earning member of the family is, if that person is not available because of an unforeseen circumstances, he passes away or he or she passes away, then there is going to be a financial burden on the family because there was an earning member who's no more. So you want to replace yourself financially, and that is why you're buying an insurance policy. So that is your primary objective of buying an insurance policy. Now that can be fulfilled with a term insurance plan. You do not need to buy an investment oriented policy because if you buy an investment oriented policy, you will not be able to buy the adequate cover because the premiums will be higher. So if you want a lower premium with the maximum cover, term plan is the only alternative. Now, term plan insurance premium also is eligible for deduction under Section 80C. So, if you buy a term insurance plan and you pay the premiums, you will get a deduction under Section 80C. Now, if you notice, government has been trying to promote this financial security and encourage individuals to buy such insurance policies for the welfare of the families and for themselves. And to motivate in this direction, government says that okay, if the premiums that you pay, I allow you a deduction in your income tax. So look at it only from that angle. Now, the other insurances that an individual would require in their own setup would be a health insurance for sure. You need to make sure that in case of any hospitalization, you would need adequate resources to get a good treatment done because the cost of medical treatment these days are skyrocketing. I mean, what used to be available at probably a treatment that was costing about 50,000 a few years ago would be approximately 5 or 10 lakhs today. I mean, that's the basic level of how the cost of medical treatment is going up. So you need to buy adequate medical insurance. So by adequate, I mean if you're in metros, you would definitely need anywhere between 10 to 50 lakhs. If you are in non-metros, then probably a 10 lakh sum insured should be good enough. But given the combinations that are available today in the form of a base policy and a super top up, a family of four can insure themselves at a very reasonable cost for a sum insured of up to 50 lakh rupees as well. And the premiums that you pay, not only for yourself, your spouse, your dependent children, even if the premiums that you pay for your parents are eligible for deduction under Section 80D. So, as I said, club two things together. the tax saving would be a byproduct, not the main reason. So I ask you a question. You need a medical insurance. Now, if you are in the new tax regime, so which is the default tax regime now, in which there is no deduction for Section 80D, would you not buy a medical for yourself? You would still go ahead and buy cover for your family. So that should be your attitude. Whether or not I get tax benefits, I am going to look at a product and take it because it aligns with my financial plan. If I get tax benefit, great. If I don't get, it's fine. It doesn't mean that I go and buy something else. So that is the basic approach with which you have to go and look for products that you need to in the last few days of the financial year, and do not get carried away and commit yourself for a policy for 10, 20 years only to save tax this year, but and then you pay on for the next 10, 20 years. I don't think that's a smart thing to do.
So question remains now. Obviously, you need to plan your life insurance and health insurance in place. And Harsh, these are the first and the basic step when we talk about planning your financial portfolio. Now, given the kind of explanation you gave in order to have the right kind of insurance, how can one avail tax benefit as per ATC and ATD?
Okay, so there are few conditions that you'll have to fulfill. So first thing, as I said, so let's take it from what kind of insurances an individual with a family should consider. One is if all the earning members in the family should look at buying a term insurance family. So I repeat, it has to be earning members of the family because there is a dependency on that income. Even if you're a single earning member family or a double income family, you need to ensure that the earning members of the family have adequate insurance. So term plan is one thing that you would look at. The other insurances that earning members of the family need to look at is a critical illness policy. The premiums that you pay under that policy are eligible for deduction under Section 80D. The third that you need to look at is a personal accident policy, that is disability due to accident. If in case of any accident related disability, there's a monetary benefit that comes to the insured while he or she is alive. So that is the third insurance that you need to look at. If you're buying this a disability, a personal accident policy along with your term plan, then you get a deduction under ATC. If you're buying a standalone personal accident policy from a general insurance company, then there is no specific tax benefit available. Nevertheless, you need to still buy it in that case. The fourth insurance that you need to look at is a mediclaim that I spoke about. In this, you will insure all family members, whether earning or not, whether they're children, young children, infants, old parents, you would look to insure all of them. The premiums that you pay in those policies, which is the base policy and super topper, all of those premiums are eligible for deduction under Section 80D. Now, there is a limit to this. You can pay for yourself, your spouse, and dependent children. And the total limit under Section 80D is 25,000 rupees per annum. If you're adding your parents, if you're rather you're paying premiums for your parents, then and they are not senior citizens, so they are below the age of 60, then you have another 25,000 rupees that you can pay. So a total of 50,000 deduction can be taken. In case your parents are senior citizen and you're paying for them, then the limit increases to 50,000 rupees. So these are the limits that are available under Section 80D. And of course, if you're paying those premiums, you must take the benefit of tax deduction, but provided you're also filing your returns under the old tax regime. With regards to premiums under Section 80C, the term plan insurance that I'm talking about, or life insurance for that matter, there is a condition that the premium should be 10% of the sum insured. So basically, or the other way around, saying that whatever premiums you're paying, the sum insured should be 10 times of that. If you're not qualifying into that criteria, then you cannot claim deduction under Section 80C. So just be mindful of these sub conditions which are there to fulfill before you claim the tax benefit under respective sections, and then you're good to go. And these are the insurances that you should look at. All the policies that I spoke to you about are pure risk cover policies, pure protection. There is no investment element to these, and there is nothing comes back to you if nothing happens to you. So these are pure risk covers, which are ideal for a family and to protect themselves financially.